All right, I'm here with my old friend and pal, Bob Hamrick. How you doing?
Great, George. How are you?
All right. We've done this before. It was a big hit, so I wanted to bring you back to kick off the new year.
Are you sure it was a hit?
I mean, some people watched it.
Okay, cool.
All right. My mom. So we're here talking about the market. It's called the Market Pulse. We've done it before. We're going to send the January numbers out to all the members, and we're going to talk a little bit about numbers, but with you, remember, you were my first broker that I signed with, so I always look to you for kind of insights of how the market's doing. So we're talking high level as well.
Mm-hmm.
First off, prior to opening up the cameras, we were talking about December. I texted you and said, oh my gosh, December was a big hit. I didn't see it coming. Forecasted like 2,000. They closed 2,500 homes. And you told me what?
What I told you was that December is almost always a great month for closings, and it's almost always one of the worst months for openings. And so we communicated about the article that came out on a Saturday or Sunday recently, and it said 20% plunge in closings. And so that was comparing January, which is always a bad month for closings, to December, which is always a relatively good month for closings. What it didn't say was the fact that we had a significant surge in openings from December to January. And so the media always looks for the bad stuff, but there's a lot of good stuff in the market.
Does negativity sell?
Of course it does.
Why? I mean, the term plunge, I mean, we had more sales than a lot of us had expected.
Mm-hmm.
In our businesses, I don't see any plunging of any kind.
Right.
So the reason December was higher, ultimately everybody had work that they were doing in their normal work environment. The market isn't stagnant from the holidays. October, November is pretty normal. Those deals close in January, but in December, you got long holidays, you got less business days, you got the consumer kind of pushing back saying, hey, don't let me in my house, I don't want to transact.
Bingo.
So the openings shrink in December, which usually harms January. So here we are, we closed around 2,000 homes in January, so substantially less than December. What do you think about that?
What I think is that I personally experienced the most abrupt start to a year that we've ever experienced in many, many years. So typically January is light, even in openings. But it was an abrupt positive start. So, and a lot of things kind of led to cause that to happen. There's some national news. There's some efforts to stimulate the economy, and more specifically to stimulate the real estate industry. So I am excited about 2026. I believe that we're going to see an increase from 2025 for 3, because we're coming out of, I hope, a pretty challenging time for the marketplace.
Yeah. So you're bullish on the spring for real estate?
I'm bullish on the entire year. And certainly the spring. It's not to say we're going to get back to 2021 or 2022
Sure.
numbers, but we're going to see a pretty significant increase in the numbers. January already showed it, which means we're going to see an increase in February, probably in the number of closings, so that we can tell the RJ that
We're back.
It's on its way back.
Yeah. So we always talk about affordability too,
Mhm.
right? So inventory seems to have shrunk a tad.
Yep.
So that shows you the market is actually tightening up, which means it's a healthy market. The last thing you want to see is inventory growing and then offers not taking place and no escrows opening. And that's when you really get like a soft market, right? That's the worst for the business. We don't have that. We have like 4.5 months inventory. So do you think the sellers will finally come out? Because it seems to be rate driven sometimes. Lots of folks have the 2.5%, 3%, and they definitely weren't trading a 3 for an 8. You think
Mhm.
that's
That, along with frustration and along with the pent up demand of individuals or families that have needed to move and wanted to move for the last 4 years, and now they're getting to the point to where they're saying, enough's enough. We have to do it. So that's part of what's happening. Here's another thing that I think might be interesting that I heard, a stat, is that there are more mortgages that are at 6% or above than there are at 3% or below.
I did not know that.
So there's obviously those numbers in between.
Yeah, of course.
But that says a lot. And there actually is refinance activity that's taking place. So I see all of that as being positive news. The frustration in those, when you're used to 5 million sales a year across our country, and that, or 5 or 6, and that goes to 4, that's 1 to 2 million people that did not transact for the last 3 years. So they're ready, and they're ready to come out and make it happen.
Right. So for the agents watching, a lot of this is to help you guys with your business. In 21, when rates were so low, there was a frenzy of business taking place. It was just nuts. And people were shooting offers out too fast. Some homes had 50, 75, 100 offers. And what Bob's saying is that many of families just felt lucky to get anything, because they thought it was like a shopping spree, and they thought the clock was going to run out and they had to put everything in the basket. So now they turn around and they love the rate, but they kind of rush the home because, competition and everything else. And they stayed patient for a while, a year or two, but after a while, they're like, you know what? This is not the house. The environment was great to buy, so I took a shot, but now, you know what? I'm willing to take the hit, maybe pay a little bit more, trade up or trade down or trade neighborhoods. So that should unleash some inventory, which should be probably 2 sales. It should be a list and a buy.
It absolutely is. I think the double transactions we're seeing them to be back pretty significantly. So that's a wonderful point. Another point is that we are seeing listings expire, but we saw a lot of new listings come to market in January. And so the expiration rate is unfortunate, but you know what that means. That means that some agents may not be as skilled when it comes to placing a home on the market. They may not be saying what the seller truly needs to hear. They may not be helping them from a condition standpoint. So there's still a nice amount of inventory, but when you take out those that are expiring because they're gonna expire because they shouldn't have been listed in the first place, that causes the leftover inventory to actually be moving a lot faster than we might recognize.
If you take out overpriced listings or ones that have trouble for whatever reason, you're like a 2 or 3 month inventory. You're in a hotter market when you set aside the ones that just don't move.
You're exactly right.
So from an affordability standpoint, a lot of politics, a lot of talk. When you watch the national news about the administration and wanting to see, and I know they're always talking to their the voting base and whatnot. I'm curious how this works. You got a group of people that own homes that love their equity and don't want anybody to touch it. But they all have kids and, nieces and nephews and, apprentices that work for their companies that are trying to buy a home, and they feel sorry for them. So I doubt any of them want to give up their equity to allow people to buy in lower. So it seems like what people are rooting for is everyone to keep their value high and don't touch our money, but let's create a new source of homes for folks to buy. And I know they tried that with, BLM land or some trading at some different things, but what is going to be the answer for affordability?
Well, everybody's talking about attainable housing. I do believe that that's a very, very challenging issue to solve through the government. I think the way that happens is you've got to free up land. You've got to be able to sell that land for below market value because construction costs aren't necessarily going to come down. So in some way, the government has to subsidize if they truly want to have attainable housing. I loved an article from the administration a couple of weeks ago that basically said, we don't want to achieve affordability by property values going down. We want to achieve affordability by interest rates coming down. Lovely, because first-time home buyers, if they hear that property values are coming down, they're not going to buy.
They don't want a piece.
Of course not. And why should they? And rents have come down to cause them to say, I'm okay here. So I think it was a wonderful message, and it's the right message. Sadly, Jerome Powell at the start of this said two things have to happen. We got to see property values come down. We got to see interest rates come down. And that's what caused the market to be stagnant. I think a wonderful message that is a reality of the marketplace. 2025 was a challenging year that was built off of a challenging year in 24 and 2023. If we were going to see negative appreciation, it should have happened in 2025. And when you look at the numbers, we saw 1.7% appreciation in 2025. Right now, builders are telling us we are not going to throw all this money out through 2026. It's going to be for the first quarter to get our inventory sucked up. They have less permits. They have less intentions to build more. Builders have a significant impact in our marketplace.
Sure.
They kind of lead pricing. And so they've discounted prices. They got to get rid of inventory. And they're telling us, but we're not going to keep doing it. So what does that mean? They're going to build less homes. We need more homes. And so it is going to cause our property values, I think, to continue to stabilize. I do not see property values coming down.
I don't either, but I worry that those builders see something in the cards that make them not want to build, because they typically try to forecast where they think values are. And if they had a crystal ball and thought there was 20% appreciation, they want permits. So let's hope they're wrong, and maybe they see a flat market and they're holding back. That consumption happens and those new homes get gobbled up. Our inventory tightens up. Now they're doing resales and they're shopping at, our agents' homes in our association, and then we actually get some volume again.
What they see is that they didn't enjoy the period that they just came out of. And that period was they built too many and they pushed prices too high, and they had to reduce those prices and throw a lot of incentives, and they had to make very little, if any, profit on those homes. They didn't like that. And so now they're saying, I'd rather build less homes and ensure that I have a profit because of supply and demand than to build too many. And so they're going to, in my opinion, cause our property values to remain consistent. And that is a blessing.
Circling back to the agents, right? All the agents that watch this out there, they're thinking about their business this year. Everybody starts off with a goal. What do you teach? Do you teach a number? Do you teach a work ethic? I've always been afraid of numbers, the goalpost moves and stuff. If you have a goal of the effort you're going to put in and some metrics that you're going to actually try to attain every day, the results should be there. I'm just curious, for anyone watching at any company, what advice do you have for agents?
Every year we go through that annual process of goal setting, and we do that with every single one of our sales associates. And we come up with the big picture number. What's your goal for income? And then we say, well, how many transactions do you have to close in order to make that? The most important ingredients are the next two. It's not the first and the second. It's your activities and your schedule. And if you are clear on the activities that you are going to do every single day, like you are a real employee to yourself, and you had a schedule that you followed, everything else takes care of itself. So it comes down to activities and schedule. And most individual agents do not have clarity in that. And so they show up, maybe, or they stay home, maybe, and they hope that something happens. You can't hope for it. You got to make it happen.
I love it. What do you tell agents on like the maintenance of business, right? Like when you have transactions, the actual escrows, the emails.
Sure.
You tell them do that first, get that out of the way, because that can clog your day, and then you can get stuck in the abyss of the administrative heck, right? I always think like, let's get that housekeeping out of the way and then let's get on the phones a little bit later. Curious if you agree.
Molly has a saying, my amazing wife, and it is, if you control your mornings, you control your day. And so I don't believe that controlling your mornings means handling your escrows. Those can be handled afterwards. If you control your morning, you are controlling your activities and your schedule, and you're putting those most important things, which is business development, first. Everything else, in my opinion, will take care of itself.
I can't get people to answer in the morning, but people I'm transacting with will. So that's why maybe I'm still following Molly's rule. I'm controlling my morning by getting my tasks done.
Sure.
They're money-making tasks that need to be done. And I'm waiting for the part of the day when I think people are more receptive to kind of the reach outs and the follow-ups that could be money-making. I think we're saying the same thing. I think it's all about how you approach it, but you got to know what you're doing.
You got to know what you're doing, but to your point, there's a lot of ways to skin this cat, and it is not automatic. You got to do this, 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 and this. That's what we love about the real estate industry, is that there's so many ways to do it, but you can't avoid those most important things of business development. If you avoid those, or if you expect that they're going to just land on you, I don't believe that theory. So if it is that you are working in the afternoons to generate business, then great, be consistent about doing that. My observation and belief is there's going to be people that you reach in the morning. There's going to be people that you reach at the end of the day. The ones that you didn't reach in the morning, you should probably try and reach in the end of the day, because everybody else is going home and not continuing to work. So you're going to double your opportunities.
Gotcha. So for everybody watching, you're excited to go to work every day. You're excited to be in this business. People should be excited to stay motivated in this business.
Yeah, right now for this microphone, of course, that's the story. But the reality is life gets in the way, doesn't it? And we do get ourselves pumped up, and we have to. But the rest of the story is stuff happens, and we aren't feeling the best every single day. So we can't think that our mindset is going to force us to do it, because sometimes we're going to be down. And when we're down, we have to still do the thing. We have to still show up, and we still have to make it happen. So yeah, I'm generally optimistic, but guess what? There's times when we all are not feeling our best, and we still got to do it.
And no matter how the market is going to perform, it's what we make of it. 100%. It's the playing field, and we have to play on it.
Oh my gosh. So we all have examples of those individuals that are having a better year every single year. 2022 was the beginning of this tough stuff. I've got agents that had a better year in 22 than 21, better year in 23 than what they had in 22. Each year they've done better. And that is an amazing, unrealistic story, but it is what happens. So why does that happen? Those individuals are doing what they know they need to do. They have a goal, and they're working very hard to make it happen.
They're gaining market share. They're not worried about how many homes are closing. They're going out and getting their own.
I know you've had those kinds of numbers before, but none of us typically needs 3,000 transactions. All we need is our share.
A couple hundred?
Yeah, okay. That'll work.
I love it. Bob, thanks for coming. Buddy.
You bet, man.
You got it.
Love it.
Very good.
That was awesome.
Give me 2 mics. Oh.